Hello and welcome to Inderes TV. Valmet released their Q4 report a good week ago, and today I'm in the studio with Analyst Antti Viljakainen to discuss Valmet and the result. Hello, Antti.
Hi, Pia.
So, last time we talked about Valmet, you said that Q4 will be quite similar to Q3, but that the revenue will stay on an upward trend. So, could you summarize? Is this what happened in the Q4 report?
Yeah, I would say it went pretty much in line with expectations. Revenue development was actually relatively muted in Q4, as revenue in the process technologies, which is like equipment business, declined due to existing order backlog that was trending down all the year 2024. On the other hand, service business and automation business posted a bit more positive numbers and contributed to group earnings positively, and Valmet was actually able to grow its earnings slightly in Q4, as was the case also in Q3.
Okay. Is there anything else about the segments, their development, that we should note?
Well, I would say maybe two things to highlight. First, process technologies reported a very weak margin. In Q4, it was like 3% of adjusted EBITDA margin, which is actually the lowest quarterly figure that we have seen in the relatively short reporting history. The main reason for the weak profitability development was negative top line growth, basically. But on the other hand, service business had an excellent quarter. They did something like almost 20% adjusted EBITDA margin, which is very good number. And if I remember correctly, it was also all-time high for this business. So businesses actually are going a bit different direction.
Okay. And the order intake was strong in Q4. Was this due to the Brazil deal that was now shown in the books, or was there anything else behind this?
No, of course, the pulp mill deal to Brazil was like over 1 billion order, so it like dominated the intake. And this was also known in advance, so it didn't surprise the markets at this point anymore. Even if we would adjust this Brazilian deal out of Q4 orders, I think that they were pretty decent. Valmet got some good equipment orders in addition to that Brazilian deal, and also services grew in Q4 pretty good pace. So I would say they were a bit better than we have seen at the beginning of last year.
Okay, so overall the orders were quite positive.
And they also beat market expectations relatively clearly in Q4.
Okay. The guidance for this year said that the figures will be roughly in the same level as last year. How do you feel about this? Was this what you expected?
Yes, it was. I was expecting that Valmet is not going to be very, let's say, proud with the guidance, given that last year we had this mess guiding first up in June and then down in October. So usually these kind of mistakes they lead to a bit more cautious approach in the following year. And the consensus was expecting a slight decline in revenue for this year, and slight increase for adjusted EBITDA. So I would say that this guidance wording was very much in line with expectations. Valmet has a relatively good order backlog going to this year. But we have to also take into account that the backlog is dominated by this Brazilian order that turns relatively slowly to revenue. So that's why we are not going to see growth this year. But on the other hand, I still expect, despite flattish guidance, that Valmet is able to improve its margin this year, because share of more profitable service business and automation business should grow this year. So it's still very much possible that the original consensus expectations will be met this year.
Okay. And then finally, looking forward, what are the biggest drivers and risks for Valmet?
Well, I would say that recovery of pulp and paper industry from this huge hangover that we have seen after COVID-19 is the main driver. First, it should increase operating rates at Valmet's customers. That should lead to higher demand in service business. And on the other hand, eventually also equipment investments will start, but the first operating environment that the customers must improve if this recovery continues going forward to next year and also to next year. This recovery is pretty much driven by global economy and European economy, so Valmet is sensitive to overall economic development. That is relatively uncertain, but still the base case is that we are going to be better phase, at least in Europe, in terms of economic growth this year and next year. And then I would say that M&A could be a joker for Valmet in the next years. The company has been doing some deals, and it looks like that they have appetite to do more, so that could increase growth and profit growth also inorganically. And the risk side, definitely, I would say these risks related to overall economic development and also to process technology business that should be able to survive with lower revenue in the next few years, and still not to burden profits that the service business and automation business generate relatively steadily.
Okay, thank you, Antti.
Thank you.
So Valmet, quite flat expected for this year, but the Brazil deal will bring more revenue going forward, and you can read more at inderes.se.